Okay, so the halving's coming up. This is always a very big deal. Everybody talks about it. Everyone's got an opinion. I think we have a pretty good idea of what happens after the halving.
I'll tell you exactly what's going to happen.
Yeah,
We're going to go from 6.25 Bitcoin minted per block to 3.125.
That's right.
That's exactly what's going to happen.
How the impacts everybody's got to take on whether this is as significant as it used to be. What's your opinion here moving forward?
I'm super conflicted. The first is that I love the halving, not as a miner, but as a Bitcoiner, because it is the evidence in the world that Bitcoin's monetary policy is functioning as it was written.
Yeah.
And so the certainty that we have around Bitcoin, the financial asset, is all a function of the certainty that we have that the monetary policy functions the way we expect. That's how we achieve a 21 million hard cap. Imagine that we woke up on, what is it, the 840,000th block.
Mm-hmm. Satoshi shows up and says, no, it's going to stay at 6.25. This is your point, right?
Exactly. Right. If we were to go the other way and we didn't have, it means that Bitcoin doesn't work.
Yeah.
The monetary policy didn't work. And so the 21 million hard cap didn't work. And it would be incredibly disruptive to all of our expectations around how Bitcoin, the software, is supposed to function. So, I think
you didn't even laugh at my joke, the Satoshi joke.
Well, that's what Jamie told me was going to happen.
I'm sorry to interrupt. Let's stay on task. Keep going. I interrupted you.
Well, but like, this is why, I think halvings I think everybody kind of delves into what you're saying, what are the impacts of it? But I come at it always from first principles, which is this is the edification of Bitcoin's monetary policy. And so it is critically important that they go off without a hitch. They have every time previously. The other thing is, and this is just the elegant brilliance that is Satoshi Nakamoto. I don't know if you've ever seen this, but and I can't attribute to the person who showed me on X.com because I forget the tweet. But the first epoch was 50 Bitcoin per block, and 50% of the supply was issued. The second epoch, 25 Bitcoin per block, and 25% of the total supply was issued. The third, 12.5 and 12.5% of the total supply was issued. And so every epoch is the percentage of inflation demonstrated in how many units per block.
Yeah. Isn't that amazing?
It's just so elegant.
Yeah.
And the mythology continues to grow, with every little design choice. All right, let's leave that aside. What are all the actual impacts on people running businesses, on people holding Bitcoin, on price, and the short answer is that, miners are going to generate a lot less Bitcoin denominated revenue unless fees rise significantly. I think the amount of net new Bitcoin available to the market is going to go down. So there's a market microstructure argument. I was having this discussion with Jack at Strike probably a couple of months ago, and we both agree that there's 100% of market microstructure impact, and we have no idea how to quantify how big it actually is. Mm-hmm. Because you see a sailor wake up in the morning or an ETF wake up in the morning, they might buy a month's worth of net new issuance, or a year's worth of net new issuance, as the case may be, as we get further and further out the epochs. So I don't know, but I think that the impact isn't zero, and it obviously isn't everything. I think, like with everything around sort of a geometric adoption curve, there's just more time in the market. And as you get into the out years, especially on sort of the southern hemisphere of the S curve, which I think we're still on, you get some of these exponential years, not in terms of price necessarily, but in terms of functionality and user adoption. So it's a huge opportunity to continue to put more Bitcoin into more people's hands and to put stronger freedom tech tools into more people's hands. And that's all incredibly meaningful. But why, I love the American HODL meme of green, 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 red. And I love that we sort of have this historical cycle of price appreciating significantly in conjunction with a halving. I have no idea what the chicken or the egg in that is, but it isn't a bad thing.
Yeah. Yeah. I mean, it's amazing how you get these cycles of speculators coming in that then some of them turn into long-term investors and long-term holders. And when we look at where we're at right now in the cycle, we are aggressively being dominated by long-term holders just through what we can see on the on-chain data. I'm just curious as to the potency of the halving. at this point, and whether that is going to be akin to previous cycles. And I think that, I guess I'm hopeful that it is, but who knows? Who knows whether this is going to be like the last? I suspect it is, though.
But this is why I go back to the most important part of the halving is the demonstration of the monetary policy.
Yeah, I think
because that's inarguable. It's inarguable, right? Why does Bitcoin work?
It's a really big deal. Like, we say it and it's like, well, yeah, of course, that's what it does. But when you think about it, there's no person that can step in and say, nope, not this time. I have all of these coins. I'm Michael Saylor. I have all these coins, and I don't want it or I want it to not go in half. I want it to be a 90% reduction or whatever, right? No person has that authority, whether you're Satoshi or not.
Exactly. It is the demonstration of the system functioning.
Yeah. And yes, I can say it correctly. It's Satoshi.
We know you're smart. But that, so I stay away from the prediction game just because I don't know, and I don't want to pretend to know. But I do with absolute certainty know that the demonstration of Bitcoin's monetary policy functioning as intended is what I latch onto the most, because otherwise it's painful, because Bitcoin mining revenue goes down in Bitcoin terms, and that sucks.
Yeah.